Hi, everybody. Welcome to FinTech Fun Talks. I'm excited about our guest today. Before we start, for those of you just joining the podcast, we are a Copper Canvas Ads Agency, and we specialize in helping those in the FinTech industry scale their businesses in a 12-month period. So we're happy to have Kevin Abramson. Kevin is the president at CoverWhale. So Kevin, welcome.
Thank you, Chrissy. Yeah, no, glad to be here.
We're so happy to have you. Would like to start by hearing a little bit about your history in the industry and what brought you to CoverWhale.
Yeah, no, I mean, it's kind of an interesting journey to get here. I landed in insurance kind of like most people, which was definitely simply dumb luck, I would say.
Yeah.
I studied finance as an undergrad and, had the opportunity of different jobs and really one of which was to work at Berkshire Hathaway's subsidiary, Gen Re. And it was like maybe the option to go down that path or to go down the more traditional finance jobs.
Okay.
But I chose what every 21-year-old would choose, which was the sexy world of insurance. And, I would say the rest is history. I did, kind of underwriting at Gen Re for a handful of years. I learned a ton about the importance, I would say, of culture and teamwork and really what it was like to be a part of what I thought was a great organization. But ultimately, I reached a little point where I wasn't sure if I wanted to stay in insurance, if I wanted to venture back to the more traditional finance world. I went down and got my MBA and really had a chance to, I don't know, I think dive deeper into who I was and what really drove me, what kind of lit the fire. And it was really the entrepreneurial kind of instincts at work. So, once I graduated, I shifted over to a company called Tiger Risk, which was a much smaller organization. I was brought in to really build out and lead their specialty casualty division as well as lead their insurtech segment and the strategy. I got a ton of exposure along the way of really just seeing the way different tech companies and tech founders were trying to approach this space of insurance. One would kind of argue a very archaic business with insurance. And one of those folks that I met was Dan Abrahamson, a CoverWell CEO. So at the time, he was still in this, tinkering stage, building out the prototype of what he was really trying to build, which was a tech-enabled MGA platform focused on really deploying technology dollars to drive a better outcome of loss, as opposed to a lot of insurance, where we spend technology dollars, it's really to kind of produce a PDF or have something kick out. So I loved the vision. I loved what he was trying to attack. And, we've been at it for 5+ years. It's really fun. We're at an inflection point, but starting to really hit our stride. So it's been a winding journey, but glad to be here, I guess.
Yeah, and I think that it would be almost odd for it not to be a winding journey, especially when you're in the world of tech. It is something that is ever changing for sure. You mentioned something that I wanted to touch on and get a little bit more of your insights on, and that is the importance of culture. And I think that we don't understand the importance of it until it's maybe a negative culture, right? Because you tend to take a good one for granted in a lot of situations. So to you, what are your top, one or two most important things in creating the culture that you want to have with your company?
Yeah, no, it's a great question. And to be honest, as a leadership team, we spend a lot of time focused on culture. I think you hit it spot on that, culture is something I think people take for granted, but I think it's really important at a startup. And I think where we are in our life cycle, we're kind of more transitioning into that growth, mature organization, hitting that 6-year mark. But, hyper growth startups, it can be really challenging. I think individuals love the challenge of what it brings. But in order to, I think build a culture where everyone is kind of really moving in the right direction, you got to have a lot of honesty and, people have to be open to feedback and constructive criticism, which for some people it's hard to take. When you work at a large organization, it's much easier to hide. I mean, you can hide in a corner. It's much easier to work at your own pace. A startup of what we found is you've got to almost have this kind of really like a high level of grit and just hard work in your DNA that you want to proactively go out and really try and bring new ideas to the company, find ways to solve problems, and I think be creative in it. So it's not just of like, hey, working the long hours. I think you can do that you'll probably be forced to do that in most companies these days and just having a really strong work ethic. But I think it's how you work. And I think, also too, it's the teamwork side and collaboration. So it's having the ability to speak freely. It's having the ability as a junior person on a team to recognize that you're a part of this organization for your brain. We want your thoughts. We want your input. We want you to kind of feel empowered to make decisions and lead a strategy. but I think like that's a little bit of at the larger organizations that's almost frowned upon. It's kind of
That's
until you've
true.
been here a decade or two, like do you get to have that voice?
Right.
So I think culture is different at every size organization, every type of company. But for us, on a really fast paced, growing, technology based, insure tech focused on this archaic business called insurance, like there's almost so many different things you could get distracted with. And you've got to really have a strong culture where everyone is aligned, understanding what the strategic mission is, and really holding true to that on a day-to-day basis. Not every day is easy. I can assure you, as for your listeners, I'm sure they know that, but I think that's one of the key pieces.
I like that. Thank you. So you mentioned that you're getting ready to launch Cover Whale version 2.0 in the next couple of months. So what can you tell us about the new platform?
Yeah, I mean, first of all, we're really excited about this. I think it's the new platform set to go live, this summer. The platform will enable agents to, quite frankly, more quickly and easily quote, bind, issue, endorse, cancel, renew policy. I mean, you name it, but allow them to do it better and just quite frankly, like the customer experience will just be so much easier for them. It's got an even faster, kind of more user-friendly interface. Things are streamlined. It's more simple. And, I think one of the key pieces of feedback that we always receive from our agents was they wanted more visibility. They wanted more visibility into their books of business. They wanted more visibility into, quite frankly, how their book was performing or where different insureds sit like in the value chain for them. What renewals were upcoming? What were some of their best drivers? What were some of the drivers that maybe, we have telematics as a key piece of our value proposition. So I think for us, it's really trying to partner and be an extension to our agents of allowing them to really see and understand their book of business in a much different way. But I think also too, as you get through this kind of investment mode and you got to choose where you're going to invest as kind of this smaller, agile company. This is just something we've been talking about for a while. It's always hard to kind of pump the brakes on what you're doing, to really take a step back and re-level set, build the foundation, because you need that foundation really to get to the next plateau. And so I think just excited. I think the agents deserve a stronger, better customer experience. And so I'm looking forward to bringing it to them.
Yeah, and it sounds like it's going to create a lot of open visibility, which can really change the way that you're doing business with your agents. So that's exciting.
Yeah, I think that's a key piece. We want them to be better at their job and just be able to interact with CoverWell in a much easier way. So I think this platform is really the start of that dialogue. And I think we see this as a journey. It's not like nothing, it's like everything else we do. It's really just the start of it. So, 2.0 will be launched this summer, but we'll continue to iterate. And I think excited because I think we can continue to move faster and invest money where it's going to really truly drive value for our agents.
That's the thing, like you said, it is hard to pump the brakes, but sometimes it's so necessary to lay a foundation for quicker growth in the future. Otherwise, you find yourself just maybe stumbling along, or if you're not meeting the needs of what your clients are asking or your agents are asking for, that's when they tend to wonder, is someone else offering something better? And so I think you're really setting yourself up for good success going forward. And I imagine too that it took a lot of client and agent feedback to inform what this new version was going to look like.
Yeah, I mean, and quite frankly, the agent feedback was not good all the time. The feedback
Yeah,
was,
you know?
yeah, no, I mean, it was very honest feedback of like this experience stinks. Like CoverWhale is there. There's so many good aspects of what CoverWhale 1.0 offered the market. It was the speed to transact, and quite frankly, we're the best at selling commercial insurance on the internet, which sounds easy, but nobody else really does it, right? And I think
Yeah.
that experience was fantastic, but it was really the back end then. Once the agent purchased the policy for their insured, that is where we fell down on the value proposition. Our servicing levels were just not at par. We had many agents very voice their concerns, their frustrations. And, the unfortunate thing, I think it wasn't a matter of just throwing money at it. We really
Mhm.
need to be thoughtful of how do we had investors, really willing to back us. They believed in what we were doing, but it just takes time. You got to map out this platform. You got to build it. Many of the large legacy players would build a platform like this. It would take 5 years, cost over $100 million. Like for us, like we don't have 5 years. So it was really trying to make sure that, to your point, we got to the core and solved the 80% of the issues and the headaches and the inaccuracies and what was driving our customer calls that were coming through or the emails from customer service. So, I think to your point, what we were most appreciative of is our agents. They've stuck with us. They've had patience. That does tell us a lot that there is a strong value proposition of what we're offering. There's clear product market fit, but now it's up to us. I mean, I think 2.0 is really our opportunity to really launch and engage and grab more share of wallet with the partners we work with, but also bring back some of the folks that maybe went away, which
Hmm.
I don't blame them. On day, year one, I mean, the floodgates opened and we were like, holy cow, this is crazy. We're not ready for it. So I think we're excited just to kind of re-engage.
And you're set up for, let's say, scaling at this point, right? You're able to maybe handle that influx better than you were in year one, which is a common pitfall of so many startups that people are interested in what you have, they want it, and then it just ends up being this overwhelming thing that are we able to scale appropriately? So I totally get that.
Well, I was just going to say, just to touch on that, because I think it's
Yeah.
important. I think scalability is important. We started, this journey focused on commercial auto. A
Hmm.
couple of reasons why we chose that line. Number one, it's very complex. It is very hard to underwrite it profitably, and I think many of the traditional players were, kind of proved an inability to leverage technology. So the complexity of commercial auto was a key piece. The high cost, whether it's a one power unit owner operator, this is an individual driving their truck across country for a living. I mean, that can be 15, 16, $17,000 a year for them. We're not selling renter's insurance, but it's required. It's obligatory. And there's just such high demand. And I think when you touch about it in our platform, V1, we couldn't scale to other lines. But now with platform V2, we are really set up to now we can nail down the commercial auto piece and the trucking spot, but now expand to another offering that kind of adds another value proposition to these agents as well as to the insureds. Be the one-stop shop for them. So I think scalability, to your point, is really powerful, and we're yet to see what that looks like in the future of this. But I think we're excited to not, for us, it's not trying to go out and hire more people. It's
Mhm.
leveraging technology to really create the efficiencies for it.
And we're at a stage where we can do that as well. There's so many tools and so many ways to automate some of those more mundane tasks or things that have been manual for so long. Well, yeah, it's a great time for that.
Yeah, no, that's spot on.
How is technology changing the game for trucking insurance, and where does CoverWhale fit into that transformation?
Yeah, I think that's another, I'd say, great question from a standpoint of technology. I think everyone is really trying to leverage technology in
Mhm.
our space, but it's not that easy. I think, quite frankly, for the legacy players, I think they really struggle of where they deploy that technology. Many of them have kind of large books of business of commercial auto insurance. They don't want to disrupt what they currently have, so they're
Mm.
unsure of how to really infuse a loss control focused telematics type value proposition, if you will. And for us, maybe on the flip side, we're more on the startup side. We've written, we'll end this year below $300 million of premium. So while large, still, on a TAM of $65 billion, like a lot of market share out there. So for us, it's allowed us to really start from the beginning of how we want to build this and how we want to leverage technology. And I'd say at the core, I think really it's bringing this tech enabled platform that digest as much data as possible in a real time to really more accurately price risk. So whether you're an insurtech, you're a traditional player, it's about pricing risk. Like who can do it faster, who can do it more accurately. Everyone has access to data. But really it's being able to digest it in a way that it makes sense. I think that is one of the key pieces. And that's one of the biggest trends that I think some players are struggling with. I think it's in our DNA just based on the people we have, the focus and the mission that we're at, that it's an area that I think we're excelling at, but still like very early innings, even on our journey with that. Every week we're processing and monitoring, 2 billion miles driven based on our insureds. There's so much we can be doing, and we're doing a lot. We're doing, compared to the industry, we're doing, I'd say, more than many, many times over than what most are doing. But the
Mhm.
exciting side is still just really scratching the surface. And I think that's really the key for us is finding the way to not only like deliver technology in a way that makes our company more profitable, but really offers the strongest, most attractive pricing to our insureds is the key piece. And identifying the risk characteristics on an individual basis.
Yeah, that sounds like a win-win and something that will be really cool to watch over the coming months and years to see how that plays out, right? Because you're working with real-time data to be able to look back on it, hindsight, and seeing what type of changes happen in real time will be so interesting and able to inform decisions going forward. It's really you're in a cool spot. Let's put it that way. I'm a little jealous of being
Yeah.
able to watch those new things come through.
Yeah, I mean, to your point though, I think it's interesting, right? About 10% of the insureds out there, they ruin the party for everyone, right?
Yeah.
There's certain truck drivers out there. There's certain, people on personal lines, commercial
Mhm.
auto that are out there, whatever it is, and their insurance policy should be 2,000% of what they're being charged. And then the 90%, there's about call that 70% in the middle. That's really kind of probably in the average. And then there's a 20% are just, they should be charged a tenth of what they're being charged. And so it's trying to dissect that. I think that's the key.
And then does it allow for that customization? What does that customization look like?
Yeah. So each one of the insureds that we kind of insure, they have required to have a telematics device, either via a camera or an ELD, electronic
Okay.
logging device, where we're going to collect the telematics through that. And what we're doing with that is we're not, watching the drivers in the cab. We're not watching them while they sleep. The privacy issues, that's not what we're focused on. Our focus
Yeah,
is really
yeah.
the driving behavior, and it's really in a way limited to, quite frankly, at the very basics of hard braking, speeding. But speeding
Mhm.
is really one of the areas that you can really nail down very tightly of understanding it's highly correlated with loss, right? So what we're trying to do is just process those 2 billion miles driven throughout the week to understand who is at a higher likelihood of going to have an accident, cause an accident, or be involved in one. And then what we're doing is we're providing that feedback to the insured, to the business owner, or to the driver itself of just saying, look, this is risky behavior. Like, we are your insurance carrier. Like, risky behavior will drive to an accident. It could cause deaths. It could also cause, the easiest side is just going to increase in your insurance. The better drivers for us, our better drivers are getting, a 30% discount to the average. So it does, as I said, I mean, these can be expensive policies, especially for these owner operators where it's, it's their business, it's their livelihood. So it's real dollars. And it's that feedback loop to them to coach them, to make them better at what they do. And, I think quite frankly, there's a portion of our insurers that just aren't coachable. They're just like, yeah, I mean, I don't want you guys like bothering me. Hey, I don't have time for this. But the majority of our drivers really value it. They're like, yeah, no, this is great. This is helpful feedback. I want to do anything in my power to lower my insurance costs. Like, this is my number two
Mhm.
spend next to fuel on a yearly basis. So it's really trying to digest all that data in a quick way and then reformulate it back to our insurers to try and say, here's some things you can do to improve, and this will hit your wallet. This will hit your check.
Yeah, and I think that that is such a positive approach, and again, a real-time approach where you're seeing what is actually happening and then giving them the opportunity to either change it or, hey, continue paying for it. So that sounds like a really, again, a win-win for everybody if they're willing to take that feedback, kind of like what we were talking about earlier, just being open to feedback, right?
That's right. Yeah.
So I'm curious, have you come across any unique challenges when trying to apply tech to such a traditional industry?
Yeah, I mean, I think there's no question that for each of our partners, we run into just slight resistance. I think more from a standpoint of just, and resistance might not be the right word, but just a time to educate. Whether it's the insureds, it's educating them of like, hey, we're not watching you in your cab while you sleep. Like, this is an event-based recorder. We're taking the telematics. We're going to provide coaching feedback to you of how you can improve your driving. For the insurance agents, it's trying to educate them on why we're doing this. Maybe another insurance carrier doesn't require it, but it will be beneficial to their insured to retain that business by delivering a really attractive rate. And then even the carrier partners we work on behalf of. I think this is an area it's been a tough line of business for insurance. So I think them trying to just understand like what is the value proposition that CoverWell is offering and why are we maybe doing something different? And we're moving quickly. We try to really understand, digest data, and then make decisions that might adjust over time. And I think for some of our carrier partners, that they're used to, making decisions like that after 5 years of data. Whereas for us, it's more 6 months of data. I'm like, look, no, we're going to kind of veer to the left here because we're seeing a lot more impact by doing X than doing Y. So I think that's been it. So resistance is maybe I don't know, a harsher word, but it's really you know, uh, the required time to educate on why we're doing what we're doing, if that makes sense.
It does. We see this in so many areas where people can be adverse to adopting, let's put it that way, because it doesn't fit what they have been doing for so long. It takes them out of their comfort zone. They don't maybe understand all of the benefits of adoption. And so, yeah, it's not just InsurTech, it is across the board where it's a challenge to get people to accept change and to understand why. So, definitely something across the board. Are you seeing certain trends in the insurtech industry or commercial auto insurance industry right now?
Yeah, I mean, I think like the biggest trend is, I would just say is still a lack of profitability from an underwriting results standpoint. So, I mean, at the core, commercial auto has been probably the most unprofitable line of insurance business in the industry for decades now. And I think the biggest trend continues to be folks just really trying to apply rate. And what I mean by that, of just increase their pricing. And
Okay.
while that, like, on the surface sounds like that can dig you out of the hole, in a way you got to stay stay high enough for, inflation or the social inflation that's out there, all these trends that are taking place. Rate's not going to be enough. It does
Mhm.
come down to really trying to prevent the loss before it happens, delivering that loss control. So we're starting to see, I'd say, from when we started, people said there's no chance that you're going to be able to get this product launched where you're going to require a telematics device, ELD camera, whatever it is. Like now, I think many of our competitors, I don't want to say like are jealous, but like they're doing something very similar. They might not be doing it across the board, trying to get that adoption. So we love it. We encourage it because as more, it'll kind of the seas will rise. And I think that's going to be the big trend of like, look, it's now I think people realize that like, look, it's necessary in this line of business just based on where the loss profile is. But it's also, I think people understand it because they're on the roads themselves. They're taking a family drive and they're getting past or they're passing that truck driver and they're nervous. And so they understand that they do want to try and make the world safer in this way and make the road safer. So I think, quite frankly, it's I think two things. It's still this consistent lack of profitability that carriers are continuing to scratch their head on, but they're really open to new ways to try to tackle it. Unfortunately, I think they're still throwing rate at it, which is one piece, but they're realizing that like maybe they don't have the game plan to do it, but I think they're realizing it's got to be something else. And that's where that loss control side is. And then I think the second piece is really seeing this, heavier adoption and less resistance to this telematics. Anytime I go on a trip or go anywhere, I always try to talk to truck drivers. My family kind of maybe sort of laughs with it, but I was on a college trip visit, with my daughter just 2 weeks ago or 3 weeks ago. I had the opportunity to talk with a couple, truck drivers over a beer and like was kind of going through the process of like, so what do you like about these things? What do you hate about the cameras? And I think it's just understanding. Like 5 years ago, they said, I don't want a camera. Now they're like, no, we
Yeah.
want a camera. Like I'm a good driver. I'm a good driver. Like I want my insurance to be lower. So that was
Yeah.
without a cover whale pitch. That was without any knowledge of what I did. It's just I think it's becoming more and more that this can be a tool to drive a better not only safety for themselves and their families and being on the road and keeping that truck on the road, but really just, I think it's the right thing to do and might get them out of, a claim that wasn't their fault even.
Right, right. It is there for their protection. And even if something bad does happen, it's able to show the reality and the truth of what happened. So I'm sure that it is, in more ways than one, a benefit to them, no matter what is happening, proving that they're a good driver, proving what happened in an accident, any type of situation. Are there any misconceptions about the trucking insurance industry or insurtech that you would love to clear up?
Man, do we have a lot of time? Let's see. I would just say, like, look, I think, and this is not meant to be critical on maybe some of the early insure techs that
Hmm.
kind of really started before us, but I think they launched really prioritized on growth above all, and especially above underwriting profitability. And they left some carnage along the way where they burned through carriers' relationships, they burned through capital partners, and, I think in a way, it's made it harder for us as like that second generation of insurtechs, but it doesn't have to be that way. And I think from the standpoint of like when people in a way, insurtech was a really very cool, sexy word, 12 years ago, it then became tarnished, maybe as recent as, 4 or 5 years ago, with just some of the results. I think from the beginning with us, like our North Star was always, we're going to grow at the pace to the extent our insurance carrier partners want us to grow, as long as our loss ratios remain industry leading. Quite frankly, 2 years ago, we saw our loss ratio starting to heat up in some segments of, geographically. And while our results were still, probably 15, 20% better than the industry, it wasn't at the level that we had promised. It wasn't at the level that we had committed to. And I think from that standpoint, like, look, we tripled down, we paused, we tripled down our underwriting focus. We launched our new kind of generation of the Drive Smart program, which is a lot of what we talked about of this, the telematics piece, a continuous underwriting, allowing us to now underwrite these accounts using technology on a daily basis, which is kind of the holy grail of like where you talk about where do you use technology in your business. We're essentially, we quoted 20,000 submissions last month and we did it with 4 humans. Right. The technology, we're just getting in the brain of the human to say, if you could underwrite this account every day of your life, what would you do? And now we're using the technology to do it. So, I just would say is like, look, I think the InsurTech 1.0, they've kind of they blazed through and they did it the way they did. In a way, to some extent, you can't blame them because people were handing them $500 million like every 6 months to just go do it. I don't know what we would have done if we were handed it. I do say to Dan, we should have went and raised that $500 million with the one-page PowerPoint in a dream, but we didn't. So, I think in a way, the misconception would just be, it's not all about that. You can leverage technology, create, and find the efficiencies or inefficiencies and deploy the technology that way. And really, I think focused on the loss control piece.
And with Cover Whale, we're seeing that happen in a way that just really is new and inventive and hasn't been a part of the industry historically. So it is exciting. Couple more questions for you. First of
All right.
all, what advice would you give someone who's looking to break into the insurtech industry, either from the tech side or even the insurance side?
Yeah, I think it goes back to maybe the topic we chatted a little bit earlier on culture. And,
Huh?
I do say it, and I say it maybe less and less now, but I think the early days I said it to our team. Quite frankly, it felt like at every monthly town hall. I mean, startups aren't for everyone.
Right.
Startups are a difficult, they're a different animal. There is a select group of people that really thrive and enjoy the pain of a startup that comes with it. But I think it does require a different mentality. And so it depends if you're starting up, like, hey, a startup in this insurtech space, if it's kind of in a way, more of a legacy or an established carrier, like in, like a Cover Whale or others that are out there. I think it's, do you have an open mind? If you're coming from the insurance side, like, you are going to be pushed to really do the non-traditional things. And, I think we've found some people have struggled with this idea of like, well, no, I want to underwrite, like, I want to go every line of this account by
Mhm.
myself. That's the way I've done it for 30 years. And it's like, well, no, we want to understand what you're doing and what you're looking at for every line of the account. And then we're going to program that into the platform. And now we're going to find efficiencies. But quite frankly, we're also going to pull the human bias out of the decision making, because we don't want you to make those decisions. We want to make those decisions on a portfolio level. So I think it is just making sure that you're truly ready for, an insurtech if you're leaping from the insurance side. On the technology side, if you're leaping into insurtech, I think it's really key. You've got to be willing to understand and learn a whole new business. The people that have struggled from technology with that leap from technology to insurance, it's been quite a big leap for many people. But early on, if somebody is asking a question of, you know, at month 3 on the job and they don't still understand what a loss ratio is. Like, I don't care if you're an engineer in the back, you're doing X, Y, or Z. Like, if you're not like reading up on insurance on your Saturday mornings or whatever, it's just not going to work. You do need to like really relearn this industry. It is very nuanced. And so I think in a way we found that the balance of people where it's people that are really enthused by technology, but also are love the challenge of this really weird and odd industry that everyone needs. And then really the people that I think want to be creative, they want to find the solutions, they want to think through it. I would say that that's kind of, those are some of the biggest characteristics.
That's a really thoughtful answer. Having been in the fintech industry as long as I have, I can honestly say I learn something new every day. And it's been a couple of decades. It's crazy to say that. There's no other industry that I've worked in that is the same. It can become mundane, but there's just so much to learn, so much to know, so much changing on a regular basis that it really keeps things interesting.
Yeah, no,
So what
absolutely.
excites you most about the future of Cover Whale and just the broader insurtech ecosystem?
Yeah, I think internally with us, I mean, I think like, look, we're really excited by relaying the foundation to get to this next level. Really turning the chapter to a just a much different organization. I'd say a more mature organization. Where we've really focused on internal infrastructure, built, invested where we need to do, hasn't always been the fun stuff that we've really had to invest in, but like, it's exciting to us because I think we're at the end of that like marathon journey in the last 18 months. And I think that's what's exciting to us internally, of really just really starting to see and reap the rewards of all the hard work and the sweat and tears that people put into it. I think what we're excited by for insurtechs in general is, can more be successful? Quite frankly, some have, I think, in recent years have really struggled. And, I think we want to see other insurtechs be as successful as possible. Some of the ones that went public early on, they struggled and they're come back and the market is supporting them. And I think that's great to see. Truly a strong value proposition. We want to see others be successful. I don't think it's ever going to be like the early days of insurtechs are taking over the world and the legacy players are now saying, no, no insurtechs. There's going to be a mix. There's going to be a blend. And I think from a standpoint of is like there's a strong kind of value proposition that insurtechs can bring to these strategic partners out there that have these legacy books of business. They just don't know how to really start these like agile companies. So I think it's going to be interesting to watch as we see over the next, call it 5, 10 years, of where the industry goes. But yeah, I think we're rooting for a lot, our competitors as well. I think from the standpoint, it will be healthy competition is good. There's a couple big legacy players we'd like to see falter if we could with, but not necessarily on some of these other smaller folks that are really trying to be scrappy and figure this out.
Yeah. Yeah, I like that approach because it really is a big industry. There is a lot of money to be made for everybody, right? Everybody can be successful and still come home with a good amount of revenue. So that's a great approach. And I'm excited for Cover Whale as well, especially with the launch of 2.0 coming out here soon. And Kevin, it's been great having you on the show today and getting your insights. Thank you so much for joining.
Thanks, Christy. No, appreciate the time.
Thanks for watching our podcast today. I'm Kristen Nielsen. I'm the owner of Copper Canvas Ads Agency, and we partner with fintechs to help them scale their business within a 12-month period. I've been in the industry for over 20 years, and I've seen how saturated the market can be, and therefore how difficult it can be to make your business stand out in a sea of other fintechs that may look similar or maybe even slightly different. But how do you make yours stand out? How do you get your message to the right people and those with high buying intent? That's what Copper Canvas Ads Agency is here to do. We are a growth partner, and we take a deep dive into your business to really understand what your strong points are, where there may be areas of weakness, and how we can fill those areas of weakness and create a plan to move forward in a strong way and really scale. So if you are interested, simply go to our website, coppercanvasadsagency.com, and schedule a time. There are buttons right there on the front page for you to book a time, and then we'll love to talk to you and see what we're able to do together.